Listen, if you're a focused learner hunting for that next massive opportunity in the stock market, you are exactly where you need to be today. The artificial intelligence revolution is shifting gears right before our eyes. So today, we're going to break down exactly where the market is heading next, and honestly, more importantly, how you can find these high-growth AI architectures that are currently trading for under $20. Let's get into it.
Okay, $2.5 trillion. Let that number just sink in for a second. Global AI spending is projected to absolutely smash past that figure by the end of 2026. I mean, we're not just talking about a tech upgrade here. This is a literal wealth creation engine. But the way that capital is being deployed, it's about to change dramatically. And that is what's creating this immense new opportunity if you're paying attention.
Now, we've all seen the first wave, right? Nvidia rode that massive centralized AI infrastructure boom to become the first $5 trillion company. They essentially built the high-end GPUs sitting inside those massive, multi-billion-dollar cloud data centers. And yeah, that was an incredible era for centralized, large-scale training. But here's the catch. Every massive build-out eventually hits a bottleneck.
So that begs the question, what is the next wave of AI growth? Well, the future isn't just floating up there in the cloud anymore. It's right in front of you. So how do we find these next major AI stocks, especially the ones hiding out under $20 a share? To figure that out, we've got to understand the fundamental hardware shift happening right now.
Section 1. From Cloud to the Edge.
Okay, so the core reason for this massive shift comes down to something called the von Neumann bottleneck. Basically, in traditional hardware, separating the compute from the memory creates this massive latency and energy inefficiency. High-end cloud computing for AI, it's incredibly expensive and power-hungry. But when you're running complex models on a mobile device or a factory floor or a self-driving car, you simply cannot afford latency. You need a localized, highly efficient solution.
Let's actually contrast these two approaches. On one side, you have cloud training. It relies on these massive centralized GPUs that suck up power and can cost upwards of $30,000 per unit. On the flip side, you have edge inference. This is ultra efficient, localized, and runs on low power. The entire industry is basically scrambling right now for affordable alternatives to handle these inference workloads without needing a multi-billion-dollar capital expenditure. I absolutely love this quote from our sources. The brain leaves the building. It just hits the nail on the head. The future puts artificial intelligence directly inside physical machines, drones, and smart factories. We're talking about intelligence moving from these centralized server racks straight to the device in your hand. And to pull that off, we need entirely new types of semiconductor architectures.
Section 2. Megacaps building the infrastructure.
Just look at Broadcom for a second. Their AI product revenue just hit a staggering 106% year-over-year growth in their first quarter, pulling in $8.4 billion. Broadcom is out there locking down the custom silicon and the data center networking. What this proves is that the baseline demand from hyperscalers is incredibly strong, which really sets the stage for the rest of this ecosystem.
Then, of course, you've got Taiwan Semiconductor. High-performance computing now makes up roughly 58% of TSMC's total revenue. They are the essential foundry manufacturing all these chips. Honestly, whether it's a giant cloud processor or a tiny little edge sensor, the road runs straight through TSMC.
Section 3. Under $20 edge opportunities.
All right, here's where things get really exciting. This is the massive opportunity we've been building up to. We're tracking 3 critical rising players in the sub-$20 space. You've got Himax Technologies, focusing on edge AI vision and drones, QuickLogic, specializing in embedded FPGA and chiplets, and Airship AI, which is democratizing machine learning vision design. Let's dig into exactly what makes each of these stocks such a fascinating play.
Let's kick things off with QuickLogic and define their core tech. Think of chiplets like high-tech Lego bricks. They're small, specialized chip blocks that literally snap together. When you combine those with embedded FPGA, which is essentially reprogrammable circuitry, you achieve what's called post-silicon flexibility. And this is absolutely crucial. It means engineers can update AI algorithms even after the physical chip is manufactured.
And QuickLogic is already turning this incredible tech into major wins. They just secured an $89 million government ceiling contract for radiation-hardened FPGAs. Plus, they landed a deal to implement their IP on Intel's highly advanced 18A process node. Throw in their new sales partnership with Quantum Leap Solutions to really accelerate customer adoption, and QuickLogic starts looking like a very high-leverage play in advanced tech.
Next up, we have HEMAX. They have made this massive pivot away from just simple display drivers straight into WiseEye endpoint AI modules. At CES 2026, alongside iCatch, they unveiled a drone AI imaging solution that delivers 4 trillion operations per second, or TOPS, of raw compute power. It uses dual-spectrum optics, blending thermal infrared and electro-optical cameras, so drones can actually see, process, and track dynamic targets in pitch black, all while sipping ultra-low power. It's wild.
Then there's Airship AI. Now, this is definitely a more speculative, high-volatility play, but their mission is democratizing cost-efficient machine learning processing for enterprise surveillance. The really fascinating part is their methodology. Instead of battling it out for ultra-expensive 3-nanometer nodes, they're utilizing optimized older 28 and 40-nanometer nodes. It gives them the ability to provide real-time video intelligence without those multi-billion-dollar upfront costs.
Section 4. Risks in the AI markets.
Now, as exciting as this all is, we've got to be real about the headwinds here. First, uneven hyperscale cloud spending. Look, if the big players decide to pause their infrastructure builds, that's going to ripple through the entire market. Second, there's rising in-house chip competition. Mega caps like Amazon with Trainium, Google with their TPU, and Microsoft with Maya are building custom silicon, which could really squeeze the smaller merchant players. And finally, hardware security. When you decentralize data out at the edge, vulnerabilities to things like side-channel attacks get much, much harder to manage.
Section 5. The future of AI chips. So what is the ultimate endgame here? It's TinyML. This is the absolute frontier of running AI inference on simple microcontrollers using mere milliwatts of power. The highest volume future of AI isn't going to be in massive, glamorous server racks. No, it's the unglamorous, high-volume reality of literally billions of tiny sensors scattered across factory floors, smart homes, and global infrastructure.
To put that into perspective, this edge AI target market is approaching a massive $60 billion. We are already seeing private bellwethers like Halo pushing towards potential multi-billion-dollar IPOs, with analysts floating targets up to $15 billion. The capital is aggressively flowing out to the edge, and the market is just expanding at breakneck speed.
So I want to leave you with this final provocative thought. As the AI future moves out of the cloud and directly into the devices in the palm of your hand, how are you positioning yourself for this massive wave of growth? The intelligence is decentralizing, the architectures are shifting, and these sub-$20 opportunities are just waiting to be researched. Thank you so much for joining me on this explainer, and I'll catch you in the next one.